Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. Word got out that to be a successful EV company, then it really helps if you have a lot of batteries, as the global battery production isn't close to ready for EVs in terms of current output, hence rendering batteries a scarce component. But increasing battery output is not as simple as turning a dial to make the machines go faster. It requires a new industry, or even industries, to be made. The EV industry is such a capital-intensive industry with so much potential revenue, then the supply chains of EVs along the way will become massive industries in themselves. The EV battery industry is one of those, and as we know, Legacy are getting themselves well invested into some very large battery factories. Now, we discovered with the latest wave of commodity prices that Legacy Auto may be at the peril of the commodities markets for the required ingredients for their new batteries. We aren't sure as to what contracts Legacy have secured themselves with mining companies, and of course they'd only have available to them whatever Tesla left. A lot of these commodity-rich nations like Indonesia and I think Chile will require that the refinement, processing and manufacturing is all done domestically. Perhaps the cathode is what will be exported rather than just the mineral. Tesla declined Indonesia for this reason. The others may not have that possibility, and thus adds to further complexity, costs, supply chains, etc., which is usually the Legacy's way. They may end up having to set up different cathode factories in various nations and train workers with lower human capital, which may hold them back. But we're hearing commodity prices are going through the roof, partly brought on through by this war and oil prices also rising, and of course the inflation word being brought up so often. So how much are some commodities increasing by? Well, let's take a look at some commodity prices. Of course, we did see a bit of a push in commodity prices with crude oil up to $120 a barrel in March, and still up about 50% from the start of the year. Of course, the cost of oil proliferates through the entire economy, which is why solar and battery will make the economy more stable. Oil affects everything, as everything uses oil in transport and more. But how about we take a look at some of the other metal prices? Aluminium, for example, again, it spiked in March with the oil prices and has come back down since, up about 13% from around the start of the year. It's hard to know how much of that is oil-related, inflation-related and war-related. How about copper then? Copper appears to be trading in a similar range as to where it was before. In fact, not far off about a 6-month low. Steel has been slowly rising through the year, up over 15% this year alone, but it's still down from some of the highs it was seeing towards the end of last year, but up about 50% from some of the lows from last year. This year's increase might be more inflation-related, as it has continued to rise steadily. Alright, they're common elements used in a car, but all cars use them. We want to focus more on the elements that are being affected by inflation, or price rises that relate to electric vehicles. In that case, I guess it would make sense to start with lithium, as it's the one we are hearing about the most. Even Elon being vocal about how much money you can make mining lithium right now, and also saying that Tesla will get into mining lithium if necessary. All lithium-ion batteries, well, they need lithium, and lithium-ion batteries are the ones being used in EVs. Yes, there is progress being made with sodium-ion batteries too, and obviously sodium is more abundant than lithium, but right now the majority of the batteries are going to be lithium-ion. Therefore, lithium becomes an essential ingredient in battery cells. And we're hearing about lithium the most because, well, unlike the other commodities, it actually has gone through the roof. The price for lithium is up from about $17,000 a metric ton to around $70,000, up around 4 to 5 times from last year. This is a huge jump in price and will surely affect Tesla's battery costs, along with all other EV producers. However, although the name of the battery is lithium-ion, it actually doesn't contain much lithium. Each battery contains about 5 kilograms of lithium, which is what Elon Musk said on the Q1 earnings call. In other words, the cost of lithium for Tesla per battery went from around $85 to $350. Yes, a massive jump in cost, but a relatively small cost when compared to the rise in Tesla's prices. Lithium up 400%, the price of a Tesla up 10%. However, the cost of lithium is only up $300, whereas the price of a Tesla is up $5,000. Not to mention, Tesla no doubt have the old price locked in for years and years anyway, along with nickel and everything else they need, possibly for the next 20 million cars they produce. Right, nickel, that's the element we're hearing about that costs so much in the battery, so much so that most of the Chinese vehicles don't even use nickel to cut down on cell costs. And we've been seeing headlines of how much nickel prices have been rising and how much it will affect the cost of EVs. This would also heavily affect Legacy Autos, who are already struggling so much to get their battery costs down. Now, nickel prices actually did shoot up from around $20,000 a ton all the way to $50,000. That's quite a significant increase. It turned out that it was rumoured there was a big short squeeze in China that caused this jump in nickel prices. It's now sitting around $30,000, still up 50% though. That's quite an impact, especially with it being such an already expensive part of the battery. However, there would appear to currently be around 100 kilograms of nickel in a Tesla battery, likely less in a 4680 battery pack. So if Tesla were paying $20,000 and now pay $30,000, that would be an additional $1,000 per battery pack due to the nickel cost increasing. The other cathode elements have not been affected much, nor cost as much. So my guess is that this would have increased the cost of a Tesla battery pack between $1,000 and $1,500. No, just kidding again. I don't think it affected the cost for Tesla at all. I think Tesla probably have nickel locked in at something like $15,000 a ton for years and years. Yeah, imagine that. Imagine that because a company purchases all the nickel you can make for the next 10 years and expand as big and as fast as possible during that period, that maybe because they ordered that much nickel from you, that you might give them a really good deal. And you might think, oh, but that mining company can't even operate at that cost and will lose money. Well, even if that was the case, they would have likely hedged themselves for future price rises, as would have Tesla if necessary too. And remember, if nickel gets too expensive, there is the backup cathode made from iron phosphate. And although the price of iron is up like everything else this year, it's still down considerably from when it peaked last year. But prior to that, iron is trading almost double where it was for most of last year. However, it is not an overly expensive mineral in the first place, which is why it is so suitable for cathodes for Chinese cars. Chinese cars need to be as low cost as possible. Therefore, they don't have the ability to offer the luxury of nickel cathodes and must compromise on range instead. Of course, Tesla does intend to turn to using more iron cathodes too, within time, once they likely perfect the technology enough to give suitable ranges to developed markets. The legacy autos are not really competing for these scarce elements yet, as they don't have their battery factories completed or in production yet. I think once these facilities are operational, then perhaps prices will increase, although I would be expecting Legacy to be negotiating all their mining contracts sooner rather than later. Judging by these prices, I think that Tesla have really used inflation as somewhat of a smokescreen to reprice Teslas smoothly into the market, closer to the market clearing price, where demand meets supply. They are exceptional value for money cars still at these prices. They're still in low supply. If Tesla are able to raise their prices closer to the value they actually offer by keeping consumers happy with a legitimate reason for increasing prices, then it will add to profits further. Tesla aren't being bashful about this either. They have said part of the reason the prices have increased because of so much demand, to not let the waiting lists get too long. They also said on the earnings call that despite all these headwinds they're going to be facing in Q2, these price increases will add to margin and help a lot. Seriously though, look at how much the cost of the vehicles were in Q1, about the same as the whole year. In Q2, the cost of the vehicles is probably going to be about the same, except the price of the vehicles would have increased a lot. Granted, not quite as much in China, but significantly in Fremont. So if those prices are up around 10% higher, with costs remaining about the same, that will have a huge impact. I'm not sure if it'll be enough to make up for so much downtime in Shanghai though. I think these margins will remain. We may see some actual inflation in labour costs perhaps, but the production line is so automated that shouldn't be felt too much either. And it should all dwindle further when we get to around 3 million units a year to start really feeling the effects of the economies of scale. It would appear that most commodity prices have increased around 10 to 20%. And yes, there is inflation, but I also think a lot of this is still due to the war and high oil prices. Some could still be to do with supply chains too. It's more than likely Tesla have locked in their prices a long time ago and won't be affected by any of these fluctuations. Instead, Tesla would have most likely just increased their margins, except we won't notice it because it may be diluted by Berlin and Texas. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.